Hello and good morning from Proactive New York. Joining me today is David Lesser, CEO at Power REIT. David, it's great to see you. How are you?
I'm doing well, thank you, and it's great to see you.
David, the group recently announced its 2021 year-end results. So can you give us an overview of Power REIT's overall 2021 performance?
Absolutely. So looking back on the year, our net income per share increased 42%, and our core FFO per share increased by 44%. Obviously, FFO is a REIT metric that people really focus on. We're pleased with our external growth activity. We actually invested $48 million in 9 separate greenhouse transactions. And really the capital source for that was a non-dilutive rights offering that we completed in early 2021. So we've deployed that capital at very creative yields. And in addition, just generally in terms of capital markets activity during the year, as I said, we completed the rights offering. We raised $37 million in early 2021. And then we also had a shelf registration declared effective by the SEC. So that gives us some access to capital. Although I will say we're really focused on sort of non-dilutive capital sources, especially given where our stock has compressed back to recently. So in late last year, we announced that we obtained a $20 million debt facility. We think that's very attractive capital given the yields that we're investing at. The interest rate on that facility is 5.42%. And we've been investing at mid to high double-digit type yields. So there's a very, very meaningful investment spread. So we put that debt facility in place, and now we have started drawing on it for some recent acquisitions.
Thanks for telling us more about full year. How about your fourth quarter performance? Tell us more about that.
So the fourth quarter, we announced quarterly FFO per share of 35 cents. As outlined in a very detailed and transparent manner, we did have a few tenant issues that was all put out in our press release. So we had some write-offs associated, really one-time write-offs associated with some tenant issues that caused us a charge of about 8 cents a share. So if you were to add that back, you would have, and again, those are one-time, but you would have 43 cents a share for the quarter. But in addition, and more significantly, we took a conservative approach to our Michigan asset, which is our largest asset, and we took the approach to not straight line the rent, which is the way generally accepted accounting principles treats lease accounting. And we did not straight line for the quarter based on some uncertainty around the timing of some approvals that we are seeking. But that alone, that asset alone, if it was straight line during the quarter, would have added another 46 cents per share. So more than double our performance for the quarter. So if you sort of adjust for those things, the one-time write-offs and the straight line, we would have hit 89 cents as our quarterly results. So that's a difference of about 54 cents a share, obviously pretty dramatic. So we do look forward to, on a going forward basis, having that straight line kick back in, which will create a meaningful pop in our earnings, obviously.
So given that you didn't straight line the Michigan rent, tell us what's going on with the Michigan property.
Sure. So in the interest of transparency, again, we put out an 8K earlier this week that provides actually the full documentation associated with a litigation that we commenced against the township of Marengo in Michigan. The township, prior to our acquisition, was very clear that this property had been identified and really that their whole township ordinance for cannabis cultivation was really focused around this property very specifically because the property was vacant and they were interested in seeing it put back into production. They were interested in the jobs that it would generate as well as the license fees, frankly, that they as a township receive. They gladly accepted license fees from us. They put us through a series of approval processes that I did not anticipate when we got started. But ultimately, as we then went from the township level to the state level, they really have not been supportive of our process, and I think improperly so. And as such, we felt we were left with no choice but to commence a litigation. And as I said, the full information on that has been disclosed to shareholders so they can read sort of the history and how we got to this point. And as I said before, we do think this is something that ultimately should get resolved. It's just really a matter of timing. And when that does get resolved, we would anticipate re-straight lining the income for the Michigan lease. But again, litigation is uncertain, and we took a conservative approach, and we'll have to see how this plays out.
Now, just pivoting to talk more about your strategy here, can you talk a bit more about your greenhouse investment thesis and why you see this as an interesting opportunity?
So we are a real estate investment trust, but I really view us very much as a technology play and really also a growth investment story as we put up pretty dramatic growth over the last few years as we've implemented this strategy. So the technology we're focused on is simply that greenhouses are a better way to grow certain crops. A greenhouse costs less to build than an indoor cultivation facility, and certainly in the cannabis space, you see a lot of these indoor cultivation facilities. And when you look at them, you see a tremendous amount of improvement to, let's say, a warehouse, where they put in a lot of infrastructure in the form of HVAC to provide climate control. They have to replace all of the lighting, so a tremendous amount of supplemental lighting that is put in there. So the cost to build that facility is way higher than a greenhouse. And then also the ongoing cost to operate is way higher than a greenhouse. Greenhouse technology has been around since the 1960s. It really started in the Netherlands. It's progressed quite a bit since then and is very well understood. And so our thesis is that you can grow very effectively this plant as well, the cannabis plant, as well as other plants in a greenhouse. You can do that better than this indoor concept that many people are focused on, and also better for, again, certain crops than outdoor. And so by way of example, if you look at the tomato industry, 10 plus years ago in this country, very little of the tomatoes we consume nationwide were grown in a greenhouse, whereas currently, in terms of the fresh tomatoes that we eat, about 60%. So you've seen a dramatic pivot in this direction, and we still think we're at the early stage of this. And I think it goes to a lot of things people are focused on. First of all, sustainability. Greenhouses do not have all of the fertilizer runoff. They use far less water. A lot of our farmland we're seeing in areas of this country that are in drought condition, and therefore growing in a greenhouse which uses 90 to 95% less water is a much better approach, a much more resource friendly approach. So, and also you start to minimize the carbon footprint. So even outdoor cultivation, a lot of that is done in really two states in this country for certain crops, like example, tomatoes or lettuce, where you see the production mostly focused in Arizona and California. So here on the East Coast where I live, most of those types of commodities travel across the entire country to get to us. So what you are now seeing, and what people really want, is more locally grown produce. It tends to be a better plant on the shelf with a longer shelf life, so it reduces food waste and tastes better and is more nutritious. And so it's just a better approach. And this, I think, is the pivot that we are seeing. And we are excited to really lead in the sense of being a real estate investment trust focused exclusively on greenhouses. There's no one else really doing that. So we're excited about this as a technology play within the REIT format.
So given this, has there been any exciting activity since the start of 2022?
Yes, there has actually. Just after the quarter, actually on April 1st, we announced the acquisition of our largest greenhouse. Actually, we closed on the 31st, so technically it closed in the last quarter, but we announced it on the 1st. It's a 1.1 million square foot greenhouse, so we're doing larger transactions. This property is located in O'Neill, Nebraska. We paid $9.35 million for this facility. And as I said, it's 1.1 million square feet. So when you factor in some of the other assets that came along with it, this is, we paid in the range of $8 and change for this asset, which we view as a huge discount to replacement cost. And we think that creates a great opportunity for the tenant to have a lower occupancy cost and therefore lower their cost of production and be a competitive tomato grower. So we're really excited. The facility, when we acquired it, was vacant, not operating, but we have taken steps to immediately, with our tenant operator, immediately put it into operation because it was ready. It was just sitting there, ready to grow. And so we're excited as we see this thing come back into life, if you will, and fill with plants, which we expect to happen fairly soon. Simultaneous with the acquisition, we entered into a 10-year lease, a triple net lease, at an 11% unleveraged FFO yield. So the yields on the produce side are not as exciting, if you will, as on the cannabis side, but we think this represents a good opportunity to diversify, because I will say that the cannabis industry is going through a lot of gyrations as a nascent industry. Pricing has really moved all over the place, and a lot of issues within the cannabis industry that we continue to work through. So we're excited to sort of diversify, but also we felt this was a distressed acquisition. Our price per square foot is very exciting. We think it just represents a really good real estate play. And look, this is our largest greenhouse facility acquired to date. As I said, it's 1.1 million square feet. It's actually quite amazing to see the size of this. It also has the ability for significant expansion, the ability to almost double the footprint of the greenhouse. So hopefully, as we get this model proven with this asset, we would expect to deploy additional capital to grow the facility quite a bit, almost double the size in the foreseeable future. So this is our first acquisition focused on food crops. We're excited about that. And again, it single-handedly doubled our square footage of greenhouses. We now have over 2.2 million square feet of greenhouses, and we continue that portfolio we expect the portfolio to continue to grow.
Yeah, lots going on in the portfolio. Are you providing any FFO guidance for 2022?
Right. So our investor deck, which is available on our website, provides sort of a roadmap to stabilized FFO, sort of forward FFO. We point to an FFO of about 83 cents per share. And again, that assumes we get back to the concept of straight lining Michigan, which we're uncertain about the timing for. And that does not include sort of releasing some of the other properties that are vacant. They're relatively small, but that does create some additional incremental income or FFO, if you will, going forward as we release a few of the smaller properties that did have some tenant issues. So there's some additional upside if you were to sort of take some assumptions on what those assets would add. Maybe that's another 10 cents per share, if you will. So we think we can get to sort of in the range of a stabilized number based on the existing portfolio of about 93 cents a share on a quarterly basis, based on the existing portfolio, but that does not really factor in any further growth. So that's kind of where we see things stabilizing, but it's really a function of timing of when we get from here to there. And we continue to work through. We've demonstrated a pretty good track record of releasing some of the properties that have had some tenant issues. And so we expect we will continue to be able to do so, even in this choppy market for cannabis property right now that we're certainly experiencing.
And before I let you go, what else can we expect in terms of external growth?
So we still have a portfolio of, kind of a pipeline of additional acquisitions that we're working on. And as I mentioned before, we're really focused on non-dilutive capital sources. We do have availability remaining on our debt facility that I described before. And again, that creates a meaningful investment spread based on the yields we're seeing and investing at. We also have the potential to issue preferred stock. We do have a small class of preferred stock outstanding, and the use of either or both of those we think can drive real accretive investments as we deploy additional capital into acquisitions. So we have a slide again in our investor deck that does show sort of where we can head, assuming we deploy additional capital from these two sources. Uses an example of investing $40 million, and that sort of moves us to FFO ranges in the $3.90 to $4 plus range based on investment spreads that it shows. It gives three scenarios. So I encourage investors to really look at that slide and understand. It's pretty straightforward analysis. And again, we also have a lease structure with a bunch of our cannabis leases, and we have a slide in the investor deck that explains this, where there's a significant amount of return of capital that comes back to us at the front end of our leases. And so the growth we're showing in that slide does not even include the reinvestment of some of those dollars. So, we're pretty confident we have a nice growth ahead of us, and look forward to continuing to put up activity in the months to come. As what I would say, kind of in closing, I'm the largest shareholder of Power REIT, and I am singularly focused on creating shareholder value. And I look forward to continuing to implement this exciting business plan that we've been focused on for the last couple of years, really around this technology play for greenhouses as really a better way to grow certain crops, including cannabis, but also now we've moved back to the food concept, frankly, which is where the investment thesis started. I was initially focused on food crops, and then cannabis was an interesting opportunity, and so now we have sort of diversified.
Okay, well, we look forward to following your progress. David, appreciate the time. Thanks a lot.
Thank you so much.